Well, hello folks, I'm L.A. Little, founder of Neoclassical Technical Analysis, and I want to welcome you to this show where we're doing reviews of stocks that mentors have chosen. We do this once a week usually. We try to post it. It's a kind of a live setting, so a little bit raw, but it's from our mentors who have mastered the model, the Neoclassical model, and what we do is we look at these stocks that they have found through their searches and have decided are probably the best trades they want to pursue, and we look at them and we decide if they are or not and how we would go about it. So that's what this show is. Enjoy the show, and I'll see you on the next one. So starting here with the indexes, if we look at what's taken place since I updated this on Wednesday afternoon, we put the comments out for the next day. And on that afternoon, you know, I'd kind of talked about this area here as kind of the critical area, and that there would be an area above it here where you would see short covering, and that short covering would last up to about there, and then over that, if it was able to get over that, right, then that could start a new leg. But it wasn't here on the S&P 500 where that was critical. It was actually on the NASDAQ, because the NASDAQ has been weaker, and typically you want the NASDAQ to be stronger, not weaker. And there the line was about here, and the short covering was going to take you up to about there. Well, you can see where this drove to. It drove right to that area. So the jury's still out here in terms of, is this the next leg up? If you do an ABCD structure, right, you've got an ABCD structure. It's just about finished on this time frame. This is going to be the critical spot tomorrow. Tomorrow being Friday, Powell is going to give us a talk. We're also going to get employment numbers, and we'll find out if another leg up is going to happen or not. If it is, it's going to drive all the way top. It's going to go back up here. And you know, that's a decent amount. It's 200 on 8,000, so I guess that's about 4% or so. So that drive higher will be a good one if in fact it looks like it's going to stick. This is the area where we're going to find out. It's right at that price point as we speak. Going to the stocks that we want to look at today. We're going to start here with DTE. This is in the utility sector. Now the utility sector got sold off on the risk on that took place on Thursday. And this was up testing into the swing point high. If you look at the volume on this bar back here and the volume there, right, the suggestion was that it would probably try and test it again. Well, given the sell-off, it didn't, but again, this should get tested again. In other words, if you hit it with more volume, right, this swing point high, if you hit it with more volume, as a matter of fact, you're hitting multiples here on the way up, and this one got over those. And now the very last one is up there. If you hit it with more volume, you should test it again. That probably will be the case. It's just not going to happen right away. Over here on the weekly, there's kind of a congestion area, right? A consolidation that's taking place. That all looks fine. And then finally, if we move over and look at it on the monthly is just slowly, you know, grinding back higher and higher, you know, as the utilities have ground higher. So all of that looks fine. If you're looking for a place to get into this thing, I would be focused here on the daily chart. And you know, given the fact that this came back as it did, this is the high, the last high. It trades right to the bottom of it. That's a full retest regen. 129.89 closes at 129.91, and so a full retest regen coming back, as it were, coming back on much heavier volume. So my guess is this will test again. If it holds, everything's normal. It's just a retrace, right? And then it should go back up, try to test the highs and try to break out. So from that perspective, you watch it tomorrow on Friday. You see if it breaks down or not. If it doesn't break down, then you can put the trade on, and you can actually have a fairly tight stop, right? You've got all this right in here. If you're playing this on a daily time frame, you don't have to give it a lot of room on the downside. Matter of fact, this is the bar I'd focus on. Bottom of that is there. Do an ATR below that, and that would be where my stop was. So when I say do an ATR, the way we do the stops here is we find an area that looks like it should be where demand should show up. In this particular case, we've got an anchor bar with a wide, well, it's probably not wide price spread, but it's an anchor bar on volume. And that low is there. And if we take the width of all these bars, if we do an ATR of them, not the width, but if we just do an ATR, you know, how much range do we have over the last 10 bars on average? And when we take 25% of that, then we can take that as kind of a price differential up underneath wherever our stop would normally be, and then we put that up underneath there, and that's kind of where we place the stop. And that's a good way to give yourself a little bit of room, but not give yourself so much room that you're going to get hurt very bad. If we go to the next one here, the next one is EQUIX is the pronunciation, I believe. And if we look at that, these guys, some sort of a digital business connections globally, internet software. It's interesting that they sold off when we were having the rally today. Now, if you look around today on Thursday, you can see, despite the rally, you saw a lot of sell-offs in the software sector. I counted probably 15 of them. Now this one's coming back into what should be a decent area of support. This is where it supported before. Below that, it's back down here. And so this gap area is the risk area. If you buy in here, I would think in here would be kind of the support on this time frame. So it's kind of coming right into the top of where you would think the buyers would show up if they're going to, at least the more aggressive buyers. And so that's a good spot. But as I said, all the software was having a hard time today. If you pull it back over, though, and look at the weekly, the 535 area looks like a more, shall we say, solid place to do some buying. And if you go back to the monthly, you know, and this is one of the ways you can measure risk. If you go back to the monthly, you know, this could actually trade all the way down to here and still be good. And we're talking about almost 100 points. You know, we're talking 80 points or so, right? So 80 points from the current price on the monthly time frame would still be a buy, right? That would just be a retest regen off the prior swing point high, which is normally what happens within 6 bars. The break was here. That's 2-3 bars now on the way up. So a pullback into here still would be a buy. And so you know, if you think about it that way, it says, you know what? If I play this on a short-term time frame, so if I go back and pull up the daily chart on this and say, okay, I'm going to be aggressive and I'm going to buy it right here, you know, I could get stopped out. Let's just say I put my stops right down here. I could get stopped out on this, and this could still be a screaming buy on a longer-term time frame. Matter of fact, we just talked about 535 being a decent area, which is right here, a decent area to buy on the weekly, or at least the first area that you would think about it. And so when you think about it from that perspective, it's like, you know, do you really want to be that aggressive here? And that's probably not what you want to do. You probably want to wait. You want to wait for it to come back, test into this. That's where you'd probably want to think about doing your buys. So that's the way that one looks. Let's go to the next one. The next one here is, what is the name of this? Formula One Group. They're a broadcasting for the motorsports company. This one just broke out on the daily time frame. If we look at it on the weekly, it's stretching higher. And if we look at it on the monthly, it's brand new highs. Now, you actually had a breakout on the monthly in the prior month. And if we go back and look at the weekly had broken out within that same month. It had broken out at the very first of the month, as we see here on this bar, right? That's the breakout right there. And so, you know, it's a continuation breakout on multiple time frames. And then going back to the daily, you can see the daily actually just broke out this week. So This thing is breaking out on all time frames. If you want to play a momentum trade, this is not a bad place to play it. The reason for that is you've actually got the congruence between these swing point highs with a decent spike up here, right? So your support zone is right, you know, your stop would be right in there with your support zone here on a full retest regen. And you know, given the other time frames, it's probably not a bad trade. So I would be focused on trying to find an entry somewhere in here and then putting your stops pretty tight. Next one is info. This is a IHS market LTD, which is looks like these guys are world leaders in analytics, solutions, IT type stuff. Not a good trade, not a good candle today, where you know spikes up, closes on the lows. That's typically not something I want to buy right away, which says it's probably going to try and retrace some. The first retest would be here. It just broke out, so you could assume a full retest regen. You've got the volume, looks like on this bar here, which is down there. So you know, somewhere in here might be a good one if we're just looking at the daily. Let's flip it over and look at it on the weekly. So 65 on the daily. Again, it would be aggressive over here. It's breaking out, or at least trying to, on the weekly. The big sore thumb here, you know, a lot of times you look for these big volume bars, which is there. That's around 64. That looks like a pretty sweet spot. And on the monthly, it's breaking out too. So I would be looking at it 64, 65. That's probably where we ought to see it try and trade back to. The last one here is Martin Marietta. The defense stocks actually got sold, or at least this one did today. And so we had a decent bar up on volume. I can see a nice congruent area right in here. That's pretty sweet. The low of that volume push was there. So that makes me think this area here is pretty good on the daily time frame. So it's somewhere around, what is that, 247 or so, up to about 249.5. So let's look at the weekly. And on the weekly, really nothing there. It's already broken out big time. And on the monthly, broke out as well. So, and again, just like we talked about before, you know, these things can come all the way back to 223 and still be good, right? So that's 30 bucks off of 250. That's 12%, and it'd still be a buy. So just realize if you're looking at something like this and you're thinking that, oh, I just can't wait, I got to jump into it. You know, be sure you understand what your time frames are, and if you're willing to take a loss on something that's probably still a buy on a longer term time frame. So if I came back all the way to here, it's still a buy easily. So if you're going to buy this little area, this little congruent area right in here, either you stop out quick or you just buy a partial with the idea of buying more towards the bottom. That's one strategy that works pretty well. That's it. Have a great one.